The accounting equation is the foundation of double entry accounting. It states that everything a business owns is funded either by borrowed money or by the owner's investment. This relationship is expressed as assets equals liabilities plus equity. This equation is not optional. It must remain balanced after every single transaction, whether you record cash, sales, expenses, or loans. Assets are everything the business owns that has economic value. Examples of assets include cash, bank balance, inventory, equipment, buildings, and money receivable from customers. Assets represent where the money is used. If your business buys a laptop, cash decreases but equipment increases. Total assets still remain the same. Liabilities are what the business owes to others. This includes loans, unpaid bills, supplier payable, taxes payable, and salaries payable. Liabilities represent borrowed funds. When a business takes a loan, assets increase because cash comes in, and liabilities increase by the same amount. Equity represents the owner's claim on the business. It includes owner investment, retained earnings, and profits kept inside the business. When the business earns profit, equity increases. When the owner withdraws money, equity decreases. Equity explains who truly owns the remaining value of the business. Today, we are going to test the accounting equation. Assets equal liabilities plus equity. So I have opened the default page of the FarrukhBooks software. Let's move to Accounts and open the journal. As you can see, the journal is currently empty. Now, let's go to the trial balance report. All accounts are displayed here. At the moment, the trial balance is balanced and empty. Next, let's go to the journal entry form and perform a few entries. First, we will debit bank fees and credit the bank account. The entry is balanced, so we will submit it to the journal. Now let's perform a second entry. This time we will debit an expense. Let's choose office supplies. We will debit office supplies with $100 and credit accounts payable with the same amount. As you can see, the entry is balanced, so we will submit the journal entry. Now let's move to the balance sheet. First, we'll check the trial balance again. As you can see, the trial balance is still balanced. Now, let's review the balance sheet to see what assets and liabilities we have and how these entries affect the income statement. We debited the expense named bank fees and credited the bank account. So the bank account now shows a negative balance. In the second entry, we debited office supplies, which affects the income statement, and credited accounts payable. As you can see, both entries have affected the balance sheet, yet it remains balanced because of the double entry accounting system. That's all for this tutorial. Thank you.